Hola amigos, I am Rodolfo Ramos, Bradesco BBI's Mexico strategist, and welcome to this very special episode today that we have. We are here shooting in Mexico Stock Exchange, and I'm thrilled to be joined by Jorge Alegría, Chief Executive Officer of Bolsa Mexicana de Valores, to discuss the outlook for Mexico's capital markets. So thank you, Jorge, for joining us this moment.
Thank you very much. My privilege, and welcome to the Mexican Stock Exchange.
Thank you very much.
Welcome you all as well.
Thank you. So for this episode, we're going to be covering 5 topics here, and I'll be kicking off us with the first one, and that's on the outlook of equity listings.
Yeah.
The IPC index has been making, is close to all-time highs. On a year-to-date basis, and in dollar terms, Mexico has outperformed the US, Europe, and many markets in Latin America. What are some of the sectors that you think will make a comeback in terms of listings? And what do you think is the missing catalyst, the missing ingredient here?
Well, I think, and we were just discussing before this, we are seeing like changes in composition of which sectors are going up, going down. We see today financials going up, but yesterday they were hurt. Construction, I think it's maybe the one that is lagging a little bit more, not necessarily today, but always commercial, food and beverage. I think those are always attractive sectors. I think financials as well, they maybe have well, and we are seeing some interesting activity on the REITs because of the fibras, and we were expecting to see an IPO soon on
next week.
On one real estate, on one fibra. So that's excellent news for us.
Yeah.
After so many years of.
And what do you think was the catalyst? Is it more of a valuation point, or more visibility on certain triggers? What do you think has pushed these companies back to the markets?
I think they did a pretty good job in terms of visiting and doing a long roadshow to explain all their already existing investor base, and they target new potential investors based on a success story. So I think that combined with an attractive valuation, I think that's why they are now trying to take advantage of this momentum and going out into the market, which is, again, very good news for us and for the market.
Yeah, perfect. So the second point here that I wanted to touch on is on the regulatory and the competitive outlook. We have seen 2 very interesting reforms. One on hedge funds, which, as Mexico lags other markets in terms of hedge fund activity, and one on the simplifying listings, making it easier for smaller companies to reach the market. So, what is the potential that you see here from these reforms?
The potential is there. The potential is quite big because the objective from the financial sector, regulators and intermediaries have been to make access to the market easier. And these new rules definitely achieve that. What is interesting enough is that so far the companies we have in the pipeline are not looking for that specific simplified approach yet. Okay. So this real estate, this fibra is coming. We have 2, maybe 4 in the pipeline, hopefully for this year, but I think we are going to be seeing 2 more. Are not yet using this simplified approach. That means that are a little bit big enough to look for, let's say, the big board. And although the regulatory side is ready for companies to go public on the debt segment or on the equity segment using the simplified approach, there are still some minor details. I think where we need to work more is on the buy side. Buy side is not yet ready to accommodate smaller listings. So this is where we are doing a big effort together with the brokerage houses in order to have also the buy side ready. Okay. But answering your question, the potential is very big. I think we need to still fine tune the market as a whole. We need to start finalizing those details to see the buy side more focused on and willing to buy smaller pieces, not necessarily directly. So we have very large pension funds that they will not take a look for deals smaller than $100 million or $200 million, which are clearly big for these companies. But vehicles, right, have some private funds buying these small deals, and then pension funds buying the fund. That's the kind of structures we are going to be seeing, and where we are looking to have more support in the short term.
And on the competitive side, you have been working with with competition now for several years now. Hasn't derailed your business. What is your outlook there? What are you expecting on that front?
I think we are seeing on the equity trading basis a healthy 80-20 since the last, I don't know, maybe 4 years, maybe more. We saw a small decline at the beginning of the year. We are back and actually gaining a little bit more now in terms of market share. And we have been, for the last year and a half or so, maybe much more closer with the customer base and going with them together with the end buyer. So by being closer to the end customer, and with a better offer and fine-tuning as well on our technology side, I think we are keeping market share and even gaining a little bit more. I think we are investing a lot in technology, investing a lot in the post-trade, which is key, right? To offer a more integrated service has been, from the marketing point of view and from the being close to the customer, has been key for us to keep improving market share and with increased volumes, which is even better.
Yeah, perfect. The third point here that I wanted to touch on is the business outlook, and Mexico has been going through very complicated geopolitics, global markets, etc. What is your expectation for the group for the remainder of the year, maybe next year, in terms of your business segments? Anything you can share there?
I think, you say that Mexico, and I would say maybe the rest of the world, we have every day we have different news, and some countries or some regions are more affected than others on these commercial discussions, to put it that way, taking place. But I think our strategy as a company is to provide also additional mechanisms. I'm not talking about as a company, mechanisms to manage risk as well, not only the trading being more flexible or faster or different alternatives for trading, which is key, one of our roles, but also the fact that we are working, and hopefully in the next couple of months we are going to see the first trades cleared on our new clearinghouse facility for fixed income. I think with all the recent events globally and in Mexico, the user case for a central counterparty for bonds is very clear, and that is going to allow us also to have the electronic trading, and that's very good news for not only for us as an infrastructure operator, but also for the different participants in the market. And you mentioned also the hedge funds, right? Hopefully we are going to be seeing also hedge funds, other mutual funds. All the buy side will benefit a lot for having better and more transparent access on the fixed income trading as well. So you will have the MexDer with a signal on the clearing side, the Mexican exchange with the CCV, and now the bond market in general will have a clearing facility as well to boost volumes and number of participants.
Perfect, that's great news. The fourth point here that I wanted to touch on is on new initiatives. You have been here almost a year at the helm of this company of great significance for Mexico, and returning really after, we were discussing this in the 90s that you were here down there already.
Yeah, down there trading on an open outcry basis, so it has changed a lot.
Right. Can you talk about the listing of the IPC futures in Chicago? What it means for the domestic markets in terms of liquidity, etc.
It's interesting. Something that we are trying to do is, the IPC index is the benchmark for Mexico. We have an index, a future contract trading in MexDer, but the liquidity hasn't grown for the last 3-4 years. Actually, has declined a bit, and this is due to many factors, structural factors in the Mexican market. The use of derivatives is not as big as we want. However, as you know, the international participants in the Mexican market is huge. So they have access to other markets, like in this case CME, where they trade today Nasdaq futures, S&P futures, of course, and other indices. So to put the Mexican index there will definitely be attractive for other participants to trade Mexico and hedge Mexico and take a position in Mexico. We are convinced that having that index trading 23 hours, 6 days a week will increase the number of participants, and there's a spillover effect into the domestic market because there are people that will hedge, right? So that's going to be very important for NAVSTRAC, which is the largest ETF linked to the Mexican IPC. There are other large portfolios linked to Mexico, so the IPC will be clearly a benchmark, and domestic mutual funds that will benefit from the added liquidity. So connecting liquidity pools is what we are trying to do with the licensing of the S&P IPC index to CME, where again the most sophisticated players in the derivatives industry are not necessarily in Mexico. They are in the desks of New York, in London, Sao Paulo. We have, of course, some in Mexico, but Mexico is more like a liquidity taker. So we need liquidity providers, and those guys are not necessarily in Mexico, and will be now with Chicago providing liquidity in the benefit of also the local ecosystem.
Oh, that's great news.
Yep.
So moving here on to our fifth point on retail investor base, can you tell us a little bit about the specific strategies, initiatives that you are rolling out to increase the participation on the retail, whether it is digital, education, so forth?
Yes, education is key. So there are a lot of efforts on education to have programs directed to we have several training sessions in the Mexican exchange, but most of them are for traders, portfolio managers, professional players. We are aiming now with a different type of seminars and education tools, aiming to basically retail people, to get people involved into the securities industry in general. But they will like the idea of investments on the Mexican stock market. They will like it. Now we need to also facilitate the access. So we are doing two things. One is market data to other participants that are focused on retail. We lower costs on our market data offering. It's basically to allow these participants to distribute more data to more players, hopefully retail as well.
Through your own apps.
Yes, it's because you need a broker-dealer to buy and sell stock. So that broker-dealer needs to have the market data. The other thing is costs. So there's for the international segment where Mexican investors, Mexican individuals can buy not only Mexican stocks, but also international stocks like Tesla or Amazon or Nvidia, that kind of shares. The transaction cost was a little bit higher because there are some fees in Mexico, some fees over there in the US or in the market of origin. We are reducing all that
on the post-trade
on the post-trade side to zero. So that lowers the barrier of entry, and it's not only for the end user to have a better cost, it's also for the market makers. The market makers will be able to quote much narrower bid-ask spreads, and that's in the benefit of the retail market as well. So it's a joint effort with the broker-dealer community in Mexico, aiming the retail. This is in the short term, right?
Yeah. Well, these were the 5 topics that we wanted to discuss here with you. Thank you, Jorge, for
My pleasure.
joining us, and thanks everybody that tuned in. Take care, amigos.
Thank you. Bye-bye.